TSW FX Wagwan. Alright, so trade review for gold, right? As usual, we'll start on the daily time frame. So I'm gonna full screen this and jump right into it. So on the daily time frame, we can see that we had a strong uptrend, right? So after finding this low here, which is a higher low, if we were to look at the structure coming up, that was the higher low. Where these bearish candles here are just, as I said, when you're in an uptrend and you see a massive pullback, that's just people taking profit. So that's just taking profit and the market correcting. We see a rally, it was just as strong. Came all the way up to this high, which is, we're going to mark that with the horizontal rail tool. And the reason being is what price does in the past, it normally attempt again in the future. So it formed a new high, which is the highest it has ever been in history. This is history right here. Highest price it has ever been. So we're going to mark that and lock that in. So we have this as a reference point now. We're going to look forward for price to do some form of reaction to this area, either break and retest for a continuation up, or we might have a rejection from this level. But given the momentum that we're seeing now, we can assume that it may break. Jump on the 4-hour. We're looking at recent price action now, so we're seeing some form of correction. Now there are two possible patterns that may be forming here. As we can look at the thicker lines, we can see that it is a possible wedge or a triangle formation here, a falling wedge or a triangle formation forming here. So we have two touch on the support, two touch on the resistance, and of course we're looking for either a touch on the resistance here to pull back here, or a continuation up, or this triangle here we're seeing some form of rejection from the support level here, which we're going to go into more details on the 1-hour time frame. But of course we see price showing some form of rejection from these levels. So of course we can assume that there's a lot of buyers in this area, but we cannot rule this out because we're already seeing that we had two lows here, and these highs haven't been broken as well. So price is basically squeezing in this apex. So these two lines that you're seeing here, we're seeing that price is actually squeezing. And normally when you're seeing a lot of consolidation, there's a pattern forming. And if there's a pattern forming, of course there's a trade to look for. And this is the 4-hour to daily time frame range. All right, so we're going to look at recent price action. Now looking at recent price action, right, we can see that price was rejecting off this support level here. Now this support level was rejected, I think it was Monday. That's sometime Monday we had that rejection from this level, and we get that rejection from here. And of course we can see that this 4-hour candle was very impulsive, very strong. So of course once you see something like that, you know that the buyers are in control, because all along those candlesticks that you're seeing here was just, you know, basically the same size, not much range, not much pips. We had a strong move down, and that was rejected, respecting the support level. And of course once price is rejected, this pin bar on the 4-hour is showing rejection, because of course price went below this level, came back up and closed above. So that's still showing that the buyers are in control. So now we're going to look at the 1-hour time frame for more clarity. Now on the 1-hour, we can see a potential inverted head and shoulder being formed. How do we know that? We can assume that this is a neckline, and this was the left shoulder, right? Price came down from the head, came back to the neckline. So we had a left shoulder here, head, and of course it's not always textbook perfect or picture perfect. Came back to the right shoulder, and usually the right shoulder is almost equal to the left shoulder. And if we were to use the fib tool, which we're going to do right now, we can see that it was a fib level being respected. So move this fib tool, put it there, 61.8% retracement. That's even another confluence there. Also, we can see that this resistance level here was broken by this candle, retested by this candle, and continued up. And when resistance is broken, it becomes support, as you can see here, confluence again. So there's three confluence that was happening here. Right shoulder, right? Support being broken and retested. Fib, another confluence. And then we're going to go on the 30-minute to look at it in even more details for the other confluences that we're seeing. Now, normally when you have an impulse up or down in any direction, when you have an impulsive move, you normally have a corrective move. Those are the two waves that we have normally have price moving. So we have an impulsive move up and a correction or a corrective move. So we had that mark here. Now this is a falling wedge. A third touch on the support. We see that third touch on the support. Got that touch. Rejection off. How do we trade falling wedge? Simple. Have a falling wedge. The beginning of the pattern, which is the highest level of resistance, would have marked that level, right? But it's basically the neckline, so we didn't need to mark it with the horizontal rate tool. So we marked that level, we had that, and then would have put our take profit slightly below that level. We don't normally put it there because the highest probability is before, not when it reaches there, right? Because price is a higher probability of price hitting here than the one above. So of course we put take profit below that level. Of course I can see that take profit was hit. Now again, as we said, when you have an impulsive move, you have a corrective move. Where an impulsive move, now we're having a corrective move. There are several possible ways that this can go. Oh, we're looking for, let's go back to the hour time frame now for direction, because we use higher time frame to see direction and lower time frame for entries. When you're trading an inverted head and shoulder, you measure the length of the head to the neckline, which is this arrow tool that we are seeing here. Put that on the neckline. And of course, we can see that it's basically heading towards this resistance level that we see here. So this apex that was forming from this here to here, here to here, we're seeing that symmetric triangle. Or it's not that much symmetric. Basically a triangle pattern. We're having price approaching that resistance level based on what we're seeing if price were to play out the inverted head and shoulder. But also we have this structure up here with the darker line that we cannot rule out as well. There's a possibility that price may hit this. Then another way to look at it is we can draw a fib from the previous high to the swing low, and we can see that the 61.8 aligns here, which if price were to come at this level, right, it would have hit the 61.8 and also the resistance level of the darker line here, or the higher time frame structure up here. Also, there's another Fibonacci level, which is the 78.6% level, and that also aligns with this structure here. But the highest probability is always the first one. So this is where we're looking for price to go. If it breaks and retests, then fine. We may look to have price hit here. But for now, this is the move that we would expect. So of course, the highest probability is the first resistance level. If price hit and rejects this, then I'm looking to trade and short the hell out of it all the way down to this level. All the way down to this level. Maybe a double bottom, because the highest probability is the first support or resistance level. So we mark this with the horizontal ray tool and maybe just trade it to here and then leave a small lot on it to continue down there. Now if we look at this, we can see that price is definitely showing some form of bullish momentum. But of course, you know, gold is very aggressive, so you have to be careful with it. So this is the direction that we're having so far for gold. Happy trading. I hope that you guys learn as much as possible and doing good this week. Hopefully we drop some more videos and a few more trades if we see any more setups. And of course, some of the pairs that we trade are gold, GBP, USD, GBP, JPY, and Euro USD. Those are the main pairs that we're focusing on right now. Because I mean, those pairs are probably some of the most traded pairs, and they have high value per pip. If you don't know what value per pip is, of course, I can rally back to the videos that we have our free course on the channel. So If you find this informative, feel free to subscribe and drop some comments. Let us know what you think. And for now, as we said, this is the direction that we're looking for gold. Further upside movement. If it breaks and retests of any of these resistance levels, we're looking for going long. We're reacting to what the market does, but it will be a very good short if it were to reject any of these levels going down. But at the end of the day, market is unpredictable.